In today's video, we are going to delve into how you can be able to manage risk so as to be able to trade profitably. This video, I'm going to teach you how you can be able to control your emotions, how you can manage your emotions so as to be able to trade consistently with confidence. So many traders are having problem with emotion, which is depriving them from becoming successful in the forex market. They might have the best trading strategy, but for the fact that they don't have the emotion to control their trades, they end up blowing the account. Whereas the strategy that they are using is profitable, but because they don't know how to manage their emotions, that is why they are blowing account all the time. So sit tight and watch this video from the beginning to the end, because I'm going to unlock some secrets on how you can be able to manage your emotions so as to trade profitably and become successful in the forex market. So don't forget to subscribe to this channel, turn on the notification icon to be the first to be notified whenever I drop new content. One of the major reasons why some people are failing in trading is their inability to manage fear. Fear is what is depriving so many traders from becoming successful in the forex market, because they don't know how to control their fears. They don't want to lose. That is the problem with so many traders, and that is the reason why they are losing, because out of fear they will miss opportunity that would have given them substantial profit. For instance, you place a trade and that trade end up in a loss, and you identify another opportunity. Instead of taking another trade, you become scared that you might end up losing because you lost the first time, so you feel you will lose again. So without fear, you will not be able to trade, but to your greatest surprise, the market will not go in your direction. Had it been you placed that trade, you would have been able to recover your previous loss. So that is the part of consistency. Consistency means repeating your trading plan, or should I say your trading strategy, consistently without minding your losses, because at the end of the month you do the calculation to know whether if it is profitable or not. So you don't just judge your trading based on daily trading. Your trading should be judged based on monthly, because sometimes you may have a bad day. That means that day wasn't profitable for you. That doesn't mean the next day is not going to be profitable for you. So that is what some traders are not able to understand, that trading is all about controlling fear, your ability to control your fear. So once you have that ability to know that the forex market is unpredictable, anything can happen, so why scared? The best you can do is to execute your trading plan without being scared. Once you have an opportunity, you place the trade, because that is the major problem with traders. They are scared. So if you want to control your emotions, if you want to become profitable in the market, you need to control your fears. Learn to manage your fears. Talk to yourself so as to understand that the forex market is unpredictable. Anything can happen. So why are you scared? Why are you afraid of something that is unpredictable? So what you need is a trading plan and a strategy. You just focus on executing your strategy without minding anything, because sometimes you are going to lose and sometimes you are going to win. So what defines your success in trading is your win rate and your risk reward ratio. So if you have like 50% win rate and you have like 3-to-1 risk reward ratio, you are profitable in the long run. So that is it. Learn to control your fears, which is depriving you from becoming successful in the forex market. The next emotions that is depriving so many traders from becoming successful in the market is greed. Everyone has greed, it's natural, but you should learn how to control your greed. If you want to become a professional trader, you must work on yourself. You must learn how to control your greed, because so many traders will place trade and they don't have target profit. They want to make all the money in the forex market. That is the problem of greed. That is why it is advisable that you learn to control your emotions. You must trade with discipline. That is why you need to have a trading plan, and this will help you to control your greed. Your risk management and your money management is very important. Don't over risk or over leverage, because the repercussion is very disastrous. So you must learn to control your greed. Everybody has greed, it's natural, like I said, but you must learn to control your greed. And how do you do that? By becoming disciplined. You must be a disciplined trader. You must have a fixed take profit and a fixed stop loss. You must have a particular level where if the market gets to, you will accept it as your loss or your win. That gives you a measurement of your loss and profit. So you don't have to be greedy. Overtrading is also part of it. When you overtrade, you become stressed up, and before you know it, you start trading based on emotions. But if you have a trading plan, know when to start trading and when to end. This will help to control the greed and overtrading. So that is why I keep saying discipline is very important in trading, because some traders hold on to their losses with hope that the trade might reverse. Like if the market is going against them, they will hold on to their trade with the hope that the market is going to reverse and head to their direction. And before you know it, they wipe out their account. And if the market is going in that direction, instead of having a fixed take profit where they can take their profit, they will be shifting their take profit with the hope that the market cannot reverse. And to their greatest disappointment, the market might reverse, head down against them, and hit their stop loss or break even. And at the end, they will end up without a profit. So what happened? They have forfeited the profit that they have made. Why? Because of their greed. They want to make all the money. But if you have a fixed take profit, if you have a good expectation of what the market is going, you have to place your take profit so that when the market gets to that level, you take your profit before the market reverses. The next negative emotions that is depriving so many traders from becoming successful in the forex market is overconfidence. Some traders, if they have made some profit, they will start increasing their lot size. They will be filled with overconfidence. That ego will start entering their body. They will think that is how the market is, that the market will keep on going in that direction. Because they have series of winning, they feel the market will always go in that direction. Before you know it, they will start increasing their lot sizes. If they were using, let's say, 0.50 lot size, they will increase it to 2 standard lot size, because they feel the market is going in that direction, and they will start over risking. Forget about the rules of money management, and before you know it, they blow their account. For you to be able to control your emotions, you need to respect your trading rules. Your rule tells you that this is the lot size that you are expected to risk per trade, and you stick to it, whether if you are profitable consistently or not. Just stick to your trading rules. Even if you're having back-to-back winning, stick to your trading rule. Stick to the lot size that you are using. Don't increase your lot size, because temptation normally enter the forex market, because it's a financial market and everybody wants to make money. Everybody wants to come out from poverty. Everybody wants to become millionaires and billionaires. But you have to trade with caution. You have to be careful, because this market is too dangerous that it can wipe out your account and make you financially, how will I use the word? it will just paralyze your finance and make you poor and wretched if you don't know how to control your emotions. So overconfidence is a problem. If you have it, you have to work on yourself. Even if you are profitable, that is good, but stick to your rules. Don't increase your lot size. Follow your trading plan, most especially your risk management, because that is what will help you in the long run. Because in forex trading, you use money to make money. So if you end up blowing your account, there is no money to trade. That is why you have to be disciplined. You have to bring down yourself. Be humble. Focus on your rules. Don't listen to people deceiving you that they are flipping the account, telling you that they can flip $100 to $10,000. They can flip $1,000 to $50,000. Don't listen to those craps. You just have to trade based on the truth. So don't listen to flippers, people that flip. Just trade based on your trading rules. So that is why you need to respect your trading plan. Humble yourself, bring down yourself, bring down your ego, and trade with discipline. That is how you'll be able to overcome the emotion of overconfidence and proud. Because this is the negative emotion that is destroying so many traders, because they feel that they have everything and they start over risking. Before you know it, they will blow their account. So when you look at yourself and see that you have all this negative emotion like fear, greed, and overconfidence, the next you have to do is to balance it. Tell yourself that these emotions are natural. Everyone has it. So what you're going to do is to balance it so that it will go well. How do you balance it? You have to write down your trading plan. Your trading plan will tell you when to trade, the lot size you are expected to use, your risk management, that is where your stop loss is supposed to be and where your take profit is supposed to be. So you have to balance your trades. Balance it, because like I said, everyone has this negative emotion, fear, greed, and overconfidence. But what you need to do is to balance them. Like I said, you need to have a trading plan. This will help you to control your emotions. Like if you have a set of rules that you are expected to obey, there is absolutely nowhere this negative emotion will affect you. One, you have a trading strategy already in place. For instance, you are using moving average crossover, and you say to yourself, moving average crossover is my trading strategy. And what are your trading conditions? Your trading condition is whenever price crosses above the moving average, you take a buy trade. And whenever price crosses below the moving average, you take a sell trade. So this will now be your trading strategy. And then you now have your risk management. Your risk manager will now say, okay, I'm going to risk 0.50 lot size. If I have $10,000 as my trading capital, I'm going to risk 0.50 lot size. And I'm also going to risk 20 pips stop loss. And my take profit is going to be 60 pips. So with that, your stop loss will be 20 pips, while your take profit will be 60 pips. And you are risking what? You are risking 0.50 lot size, which will now amount to what? $100 per trade. And that amounts to 1% of your trading capital. So this means you are risking $100 to make $300. So that is 1 to 3 risk reward ratio. So once you have this in place, the next thing you have to do is to write down that you will never ever trade when there is news release, news that impact price movement like NFP, CPI, and others. So you write it down. So what you will do is you check the Forex Factory calendar to know when these high impact news are coming out. So once you have been able to identify when it's coming out, you make up your mind to stay away from the trade, to stay away from the market until the news comes and go before you can trade. So doing this will help to minimize your risk, because during news release the risk is too much, because NFP in 1 minute can move 300 pips. So imagine if you don't have stop loss and you risk 2 standard lot size, and you place a trade during the NFP news release and the trade goes against you, especially if you are trading gold. Just imagine how much you are going to lose. So you stay away from high impact news. So this should be written down on your trading plan, and then you know when to trade and when to stay away, so as to minimize yourself and your risk. You might say, okay, I will start trading during how do I say it? Okay, see, I will start trading in the morning and stop trading in the afternoon, or I will start trading in the afternoon and stop trading in the evening. All these things are things you should write down. This is what we call trading plan. So once you have the trading plan in place, the next thing you have to do is to focus on them. Trade based on your plan consistently. So with that, you have been able to kill your fear. Now you don't have any fear. What you know is that whenever price crosses above the moving average, without fear you take a buy trade, and whenever price crosses below the moving average, without fear you take a sell trade. So now you have been able to defeat your fear. And for your greed, you now have a fixed take profit and a fixed stop loss. So whenever price hit your take profit, you close for the day, you have made a profit. And whenever price hit your stop loss, you accept your loss and wait for another opportunity. So with this, you have been able to control your greed. And for overconfidence, you make up your mind that you're going to stick to your lot size. If you're using 0.50 lot size, no matter how profitable you are, you have to stick with your lot size. You have to stick with your stop loss, and you have to stick with your take profit. So the levels must be written down so that you stick to them consistently. So this will help to control your greed, because right now you know what you are expected to gain from the market, and you know what you're expected to lose from the market. So this will help to limit your risk. It will reduce risk and help you to become profitable in the long run. So if you're able to implement these 4 steps on how to manage emotion before executing a trade, you'll be able to trade profitably in the forex market, and you'll be able to trade without fear, without greed, and without overconfidence. So that is all I have for you in this video. If you love this video, give us a thumbs up. Don't forget to subscribe to my channel for more educative content like this, and also don't forget to turn on the notification icon to be the first to be notified whenever I publish new content. I will see you again in my next update. Enjoy the rest of your day. Goodbye.